So how can we raise the participation rate of small cap companies on the Nigerian Stock Exchange? Let's listen. Hi, folks. Welcome to The Way I See It, which is my podcast on investing, personal finance, money, the economy, and what we can learn from all these. This week, I want to talk about the power of investing in groups. Last year, I was at a conference organized by the Nigerian Stock Exchange, and a topic that we dwelt on was on how we could increase the participation rate of the small cap Nigerian companies that were not quoted. Like NSE wants to get more smaller companies quoted. And the question was, how could we do this? NSE has done a lot in terms of reducing the cost of being on the exchange. They had created a special window, the alternative securities market, so that companies could basically come in there if they were smaller in terms of market capitalization. This used to be called the second tier market. So NSE has done its own part in terms of regulation and making a pathway for these companies. But I think still they want to basically boost that number, get it up to speed. So I was just thinking about maybe we could look across the waters to the United States and see if we could get something that was working over there and sort of customize it, and then see if that can increase the participation rate in Nigeria for us. Two things came to mind. One was the SPAC, or the Special Purpose Acquisition Companies. The other was really should we say, the democratization of investing through this, or the fintech apps like Robinhood, where you have a lot of retail investors that are pulling together and doing investments together, So the retail market has now become a larger force, almost competing with the hedge funds. So two concepts I think we can merge together, maybe customize, and see if we can use them to achieve our aim of increasing the participation rate for the small caps in the Nigerian Stock Exchange. So let's talk about the SPACs and how they are set up and how they function and why they are useful. So the SPACs are like blind trusts. So what happens is that an investor goes, he gets all the investors, they raise money, so they raise a pool of funds. But those pool of funds have no object. So they're basically called like blank check companies. So you raise money, and then that money or that pool or that fund is then registered on the stock exchange, literally. Then those investors that own that pool of funds then go out and look for target companies to basically merge with. When they find a target company, what then happens is a reverse merger occurs, where the target company then merges with the fund, and then the target company then takes the place of the fund. So the way it would work would be something like a company would raise, say, $100 million, and then that $100 million is then in a fund and is registered in the New York Stock Exchange, for instance. Then the company then goes and then gets a small company or a startup or a target company. When they then merge with target company, the target company then replaces the fund on the stock exchange. And you can see that the pathway to then be listed through this direct listing route is cheaper, it's shorter, it's less cumbersome. So it does offer that advantage that you can get smaller firms to be listed without going through the rigmarole of an IPO, all the costs involved, all the advertising involved. So it's a faster way and a cheaper way. That's basically what the SPACs are doing. And they've been very, very successful. Like there's a boom now on SPACs in America because of that, this point of being cheap, but being cheap in compared to an IPO, normal IPO process. And I think it would work in Nigeria because one thing that we need is to get more coverage, or should we say more boots on the ground in searching for quality companies that we can bring to the exchange. The reason why SPACs also work is because the founders that raise the funds they are investing their own money. So they are initially, that is, so they are looking for quality companies that they can bring to the market that they can then sell to the larger market. And when the larger market buys into their fund, they can also exit by selling their shares. So they're bringing quality companies because they're going to have to then sell that company to the larger market. They identify, they do the initial seed and pre-investment, then they then bring the company to the market. So that's really what is really key for them, that they are going out to find quality companies and they are holding the hand of those companies and then they're trying to promote them to the bigger market. The same thing could work in Nigeria. The NSE, like I said, had already set up the alternative securities market. And what they had done is they put that you must have at least these two individuals or these two groups of individuals if you want to set up in the alternate securities market. You have to have a designated advisor, and it's just going to be like a financial advisor that would basically do the listing for you to be on the NSE. Then you have to have a growth ambassador, and the growth ambassador is going to be a well-known person in the ecosystem or in that sub grouping, and then he then basically holds the hand as the face of that whole transaction. So if we look at this and we say, how can this work in Nigeria? Let's look at the various agricultural funds that are out there. We know those funds where someone says, hey, invest in this agricultural scheme through crowdfunding, but I'll guarantee you X% for every year or every month. So you normally have these guys that come and they're going to do agriculture and they're going to pay you a fixed percent, And I always thought that was always an error because you're taking a fixed cost or fixed obligation into your business, but the output isn't fixed. Rains might not fall that year and your output might be lower, but you already have given yourself a fixed obligation. So there's already a mismatch in that. If we did an SPAC, for instance, and we said we're going to do Cassava 1, for instance, so a group of investors will then go and raise, for instance, 10 million naira or 50 million naira, and they would take those funds, create a fund, and then list it in the alternate securities market. Then they will then go out to various cassava aggregators or companies or processors or farmers and say, hey, you guys, form an association and come and invest or come and merge with our SPAC. Once those companies in the cassava subsector then merge with the SPAC that's listed on the alternate securities market, they then replace that fund on the market. And so, of course, this is now a direct listing. It's more cheaper. It's more direct for those companies. Why will they do it? Because they want access to the funds. They get the funds instead of having to promise a fixed obligation to investors. They get access to this long-term equity fund, not debt, equity fund, which they can take, and it's a lot longer. It's more patient. They can plant, they can harvest, they can process, and they can pay back as dividends once a year rather than making this monthly payments. And basically, everyone is happy. The stock exchange has this brand new cream of companies listing. The founders have got a company that they can invest their funds in because, of course, we know how the fixed income rates are now. They're very, very low. And of course, the companies are able to then access long-term capital. So everyone is happy. And you could have variations of this in many ways. You could have Nollywood One. A company could say from a SPAC, and that SPAC should then go invest in Nollywood, maybe a production company or leasing company. And then the leasing company then replaces the SPAC on the alternate securities market, which is on Nigerian Stock Exchange. And then it's a direct listing. They get the funds. The investors get access to deploy their capital. And of course, the exchange then gets this new breed of investors. Remember the point I made initially. You have the promoters going out to knock on the doors of these potential companies to bring them in. So there are more boots on the ground, and you may be more acceptable because they are not coming as bankers to sell something, but they are coming as partners to basically grow the business. The second leg with the retail guys is that we can target those SPCs to the retail market, and we say, hey, we can have the retail guys investing in units of 1,000. So rather than going like normal to the institutional investors, we could say, hey, if you have 100 naira, you can invest. And we do a big pool. So if you go to Kano and you want to do an SPAC for tanning, do 100 naira and then have people to invest and have that target. Make it really, really simple. People that know they are going to invest in a tanning, but that company is going to be quoted. So there's a bit more oversight. So it gives people a bit more confidence that this investment is going to be managed by professional managers, is going to be quoted. So I can trust them better than just giving the money directly to the tanning company. So it's a bit of that there that, you make the whole process more institutionalized and it's a bit more formalized, and you're able to get more retail investors to then come in, give tax advantages as well. And if you put money in the SPAC, that money is going to be taken off your taxes, that sort of stuff. So it will have to basically pull all those levers. And like I said, the benefits are there for everyone. The stock exchange gets new members. The investors that invest in the SPAC get a way to access growing companies in growing companies in a new way. They can talk to them. It's not only a come and invest in my private scheme, it's come and invest in the Nigerian Stock Exchange. That carries its own advantages. And of course, those companies then get access to the Nigerian stock market. They can raise more funds from a larger pool. They become more established, they become more known, their brands become more, should we say, more out there because they're now in the Nigerian stock market. So I think it's the way that we can do this, bringing that SPAC model and having a retail crowdfunding to then bring it in together, cut the edges around, make it a bit more Nigerian, add this, remove this. And I think that might be a model that can work under the alternate securities market that the Nigerian Stock Exchange has created. So let me stop here. If you guys have ideas how this would work, or if you have any objections or have any comments, let me have them. Send me a tweet, finplancalo@1. Send me an email. It's going to be my first and last name, kaluaja@gmail.com. Let me know what you think, yeah? And we could work on this together, do a paper and see if we can try something out and if this can have legs per se. And that would be our own contribution, yeah? Thanks, guys, for listening. I appreciate you guys. Keep sharing, keep listening. Let's keep learning together. Come back next week and we'll have more for you, yeah? You guys have a great day. Bye.